Welcome to Investero. Rivian was once hailed as the next Tesla, a company set to revolutionize the electric vehicle industry with bold ambitions and innovative technology. But in just a short span of time, Rivian lost over $100 billion in market value, one of the steepest declines in recent automotive history. For many companies, such a massive loss would spell disaster. But Rivian's story is not one of collapse, it's one of resilience, adaptation, and a determination to come back stronger than ever. Rivian went public in November 2021 with one of the biggest IPOs of the decade. Briefly valued at over $150 billion, more than Ford and GM at that time, investors were excited about Rivian's all-electric trucks and SUVs, which seemed perfectly positioned to capture the growing demand for EVs in the US and beyond. The company had the backing of giants like Amazon and Ford, with Amazon even placing a massive order for 100,000 electric delivery vans. Hype was at its peak, and Rivian was seen as Tesla's closest rival. But reality hit hard. Supply chain shortages, rising costs of materials like lithium and nickel, production delays, and intense competition in the EV market sent Rivian's stock tumbling. Within months, the company's valuation collapsed by over $100 billion. Wiping out the dreams of early investors who had expected quick success. Rivian struggled to scale up production at the pace it promised. Deliveries fell short of targets, costs ballooned, and skepticism grew about whether Rivian could survive in a market dominated by Tesla and flooded by new competitors from legacy automakers and startups alike. However, what separates Rivian from many failed EV startups is its foundation. Unlike other companies that rely on hype, Rivian has real products on the road, including the R1T pickup, the R1S SUV, and the delivery vans already rolling out for Amazon. Customers and reviewers consistently praise Rivian vehicles for their performance, off-road capabilities, and unique design. The vehicles are not just prototypes, they are real, functional, and impressive machines. Rivian has also been investing heavily in infrastructure. The company is building out its own charging network, service centers, and a massive production facility in Georgia, known as the Rivian R2 factory. Designed to produce more affordable models and significantly scale manufacturing. While building factories is expensive and slow, it's a long-term strategy that puts Rivian in a stronger position for the future. Financially, Rivian has had its struggles, burning through billions of dollars in cash as it scales up. But it also still holds a strong cash reserve thanks to its IPO and large institutional backing. Unlike smaller startups, Rivian has the runway to continue investing in growth while weathering short-term challenges. Amazon's partnership also remains a powerful advantage. The exclusive deal for Rivian to provide electric delivery vans gives it steady demand and guaranteed volume, something most EV startups never have. What makes Rivian stronger than ever today is not just its technology or its partnerships, but its ability to learn from setbacks. The company has adjusted its production targets, cut unnecessary costs, shifted focus to sustainable growth rather than chasing unrealistic numbers. While the stock market punished Rivian brutally for failing to meet early expectations, the company now stands on more solid ground. With real vehicles, growing demand, and lessons learned from its early missteps, Rivian's long-term strategy is about endurance, not hype. The EV market is projected to grow massively over the next decade, and Rivian is positioning itself not just as a Tesla competitor, but as a brand built for adventure, utility, and fleet solutions. The company is betting that consumers want more than just sleek cars. They want versatile electric trucks, SUVs, and commercial vehicles that can handle real-world challenges. While it's true, Rivian lost over $100 billion in market value, that number doesn't define its future. Market valuations rise and fall, but what really matters is execution. Rivian is still young compared to Tesla, which took nearly 2 decades to become profitable. If Rivian can scale its production, control costs, and continue delivering on its promises, it has every chance of being one of the leading players in the EV revolution. The story of Rivian is not one of failure, but of resilience. The company has faced setbacks that would have destroyed many others, yet it continues to push forward, innovate, and expand. Losing $100 billion in market value was a painful reality check. But it also forced Rivian to grow up fast, focus on what really matters, and prepare for the long journey ahead. In many ways, they are now stronger, more disciplined, and more determined than ever. Rivian's story is a reminder to investors that stock prices are temporary. But strong companies with real products and long-term vision can survive turbulence. It may not be easy, but Rivian's path forward could still make it one of the defining EV companies of the next decade. Subscribe to Investero